Hello and welcome to another chart lesson update from Oliver Velez, sponsored by iFundTraders.com. My name is Oliver Velez and I'm going to bring your attention to JDSU. This was a play that was spotted in the middle of February, and a very important event that I teach all of my traders to identify and exploit occurred during that time. I call it the marching bull elephant formation. Whenever you get three relatively solid green bars that occur in a row, it's a very powerful footprint or sign that major institutions are quietly accumulating the stock. Now, every stock has a number of key participants, key institutional participants. All right, this number varies, of course, and a stock's personality is largely dictated by what the vast majority of the key players feel and are doing. If, as an example, a stock has 10 powerful key players that are active in the stock at this particular point or time, if 7 of the 10 are net buyers of the stock, you'll have a tendency for the stock to rally in a very powerful way, or to show strong signs of support. The pullbacks will be weak, the moves up will be strong, and of course this applies in reverse. When 5 are buyers and 5 are sellers in relatively equal amounts, you get no real price appreciation or deterioration. There's an equilibrium. Now, the simple number is really less important than the amount of activity. You can have 2 buyers of the 10, but the 8 that are not net buyers are just kind of quiet, while the 2 are busy aggressively buying the stock, and you can still have an upside momentum. So it always comes down to a matter of the supply-demand ratio more than the number, but I'm sure that you understand that stocks and their activity is largely dictated by the big players. Our job as individual market participants is to hunt for the signs that the vast majority of those key, large, meaningful players, the vast majority, it's either on the buy side or the sell side. These 3 marching bars together that clears all the data to the left of it is a very powerful sign that the major boys, the big guys, are aggressively taking all the supply, accumulating the stock. This is a sign for my traders that it's time to jump on board. Unfortunately, I did not get into JDSU until this pullback. Okay? I featured it after this very, very powerful run to the upside into the beginning of March. I wanted the pullback to come back as low as maybe 10 or 950, but understanding that our desires and wishes aren't always completely adhered to by the market, any pullback with a powerful bull accumulation sign that occurred would be, of course, good enough for me. That occurred in the middle of March here. This was our initial buy point, and we had a very, very powerful 2 weeks in the stock so far. I believe that as we move further and further away from the 20-period moving average, that we're setting ourselves up for JDSU to pull back in. That pullback will hopefully provide a wonderful opportunity to let the second shoe drop on our accumulation of JDSU. I would look to buy into any pullback from these current price levels, particularly any pullback that successfully retests and holds at the 20-period moving average. Now, I'm not overly concerned if JDSU actually pulls back and breaks a little below the 20-period moving average. Sometimes they offer even more powerful springs to the upside, right? So I'm not necessarily concerned at this particular stage with breaks of the 20-period moving average, particularly since I'm only in with my one lotter. Now keep in mind that I will ease into the play over time and in an incremental fashion, right? Now, a lot of traders say, well, Oliver, you put on a little bit at around $11 and maybe it pulls back to 12 and you put on a little bit more at 12. But what if JDSU doesn't pull back and it just continues to rip to the upside? What do you do then? Well, then I have to settle for the very, very disappointing position of having made a little bit of money. All right. And so this happens to be one of the small drawbacks of the incremental approach. Sometimes you actually wish that you put everything on at your first buy because the stock unexpectedly rips more aggressively and more powerfully than you expected. But isn't it better to be in a position where your downside is, one of your downsides is that, oh my goodness, I didn't make enough money. I made money, but I didn't make enough money. Right? If that's all we have to deal with as a drawback from the incremental approach, I'm in, ladies and gentlemen. More to come on this winning play. We're looking for a pullback to get in on our second buy. But if that pullback doesn't come, we'll sit back and enjoy the ride with our tiny profit. Stay tuned.